All right, Mr. Benjamin Cowen, thank you so much for joining us once again.
Thanks for having me. A pleasure to be here.
Yes, absolutely. So I'm going to start off on a lighter note, but then we got to get into something serious. Your community, they love to comment on your videos. I stopped doing some life-changing event in order to watch this video. I woke up from a coma to watch this video, but yada, yada, yada. But one of the latest comments on your video is, I stopped moving my funds off a Coldcard to watch this video. So a little gallows humor going on right now. Of course, everybody watching this probably already knows, but there has been an exploit in the Coldcard hardware wallet, creating weak entropy, a bad random number generator, which means that funds are at risk. If you haven't moved your funds off of a Coldcard device, please do so. You can pause this video and go do that. But Ben, I would love to get your opinion on what this means, and do you know anybody who's been affected by this?
I mean, I don't know anyone personally, like in real life, that's been affected, but obviously, like people online that I've not really met, but I've seen plenty of people affected by it. So, I mean, it's a sad day for the cryptoverse. It's a sad day for the Bitcoin community for this to happen. It certainly has thrown a curveball, I think, for a lot of people, and it's devastating, and it's not. I mean, it's in a way, it's almost worse in some ways than FTX and Voyager. Not necessarily in the number of people affected, but just in the fact that like everyone who was on FTX or Voyager or Celsius or BlockFi, like you knew you were taking a risk, right? But I think with something like Coldcard, a lot of the people thought they were really doing the right thing, and they're like, look, this is what we were told to do by a lot of people, and we still lost out. And so I think the devastating thing is that a lot of people are kind of just leaving crypto. And to some degree, you can't blame them. I mean, if you've been stacking sats for years and years and years and putting it on a Coldcard, and then you just wake up and it's gone. I mean, I don't know. Like if that were me, I'd probably be like, I just want to buy index funds now and not worry about this stuff anymore. So it's a tough day for the cryptoverse for sure.
Have you been a proponent of self-custody over the years?
I self-custody my Bitcoin. I don't own any of the ETFs. I don't keep my crypto on exchanges for very long. I do use exchanges, right? But I treat exchanges like I would a public restroom. I go in, do my business, and get out as quickly as possible. I don't linger. So, I mean, I've never owned a Coldcard, but I imagine there are a lot of people that that have been affected. And I think one of the things too that I kind of came to the realization of a couple of years ago with the ETFs was that, while I thought owning your keys made the most amount of sense, I understand why some people don't want the responsibility of owning the keys to their Bitcoin. I mean, it's weird because it's like it's antithetical to Bitcoin in a lot of ways. Like it's kind of like, well, the point of Bitcoin is that you own it and you're not reliant on some centralized party or some third party to custody that Bitcoin for you. So it is antithetical to Bitcoin. But at the same time, I know a lot of people in my personal life that were willing to go out and buy the ETFs, but we're not willing to, custody their Bitcoin. And I think this event with the Coldcard is only going to make that even stronger, So it's hard because like people have lost money by keeping it on exchanges. They've also lost money keeping it in what they thought was a safe device. So then it's like, well, where do you keep it? Like what do you do? Are the ETFs safe? Hopefully they are. But again, no one ever fully knows. And I think too, when it comes to other assets like gold, for instance, I've been bullish on gold forever and I like owning gold. But the funny thing with gold is that I'm very happy to go buy the ETFs that track gold, whereas I wouldn't do that for Bitcoin. So there's perhaps some hypocritical things from me in that. And so once I kind of realized that, I was like, yeah, I probably shouldn't, give people too hard of a time for buying the ETFs, because when I go buy gold, like I'm not going out and stacking gold in my house. I generally just go buy the ETFs. And that is also antithetical to gold, right? I mean, the ETFs could theoretically be worth nothing under certain crazy future circumstances. So it's a tough day in general, and I think people are trying to figure out what makes the most amount of sense for them.
Yeah, absolutely. And I think one of the biggest lessons is that it takes really a very high level of responsibility to do this properly, right? The big lesson coming out of this is multi-vendor, multi-sig, having hardware wallets from different companies, different manufacturers, and putting them together in a multi-sig. And that's not something extremely simple, right? And
Right.
you're also telling people that they need to roll dice 100 times to generate entropy to create your seed phrase. I mean, all these things are extremely foreign to the average individual. And another thing we realized in this whole entire horrible situation is that many people are not comfortable even moving their Bitcoin off of their hardware wallets, right? They don't practice. They just put it in their hardware wallet. They sit it there and they forget it. But this is sort of like a firearm. You need practice. You need drills in order to be comfortable, especially in a situation of duress, to move your Bitcoin when you need to.
Yeah. No, I mean, and I think a lot of people, and I mean, it took me a long time to get past the whenever you send crypto, you kind of like take a deep breath. You're like, please make it to where I'm trying to send. I mean, I the longer you do it, the less you worry about it. But I remember, like a decade ago, always kind of holding my breath after sending crypto anywhere because I was always worried maybe I didn't copy it right or, something would happen and then I would just completely be out of that money. But it's tough because, if you look at like the valuation of Bitcoin against the S&P, it's basically at the same valuation it was 6 years ago, you know? So there's got to be a lot of people asking themselves, like, what did they gain by holding Bitcoin and then having to take on all this risk over the last 6 years? I mean, it's a sobering reality to sort of face.
It's hard. And one thing you mentioned in a recent video is that there's been a lot of egg on our face in terms of this industry, right? The rug pulls, the DeFi hacks, the Coldcard hack, and even presidential rug pulls. So when you talk to people outside of the cryptoverse, what is their reaction to you when you say you work in crypto?
Yeah, I mean, I don't. A lot of people. There are a lot of people in real life that I know that do invest in the crypto space, but they also invest in other things. I mean, we'll talk about other investments too. Like I don't just stick to crypto, even though that's probably what I cover 80% of the time on my channel. I think there's a lot of people that are just not that interested. They're like, all right, that's kind of good for you, but I also, to be honest, something like 7 or 8 years ago, like I stopped trying to get people into the space. Like I just stopped trying. And the reason is because, I tried to get people into the space in some of the earlier cycles, like the 2013 to 2017, all that stuff. And what happens is you're unable to convince most people to buy in the bear market. And so they won't listen to you until the bull market. And if they're lucky, they'll listen to you before the top. But the problem is if they buy, let's say you tell them, hey, this is a good, this would be a good investment or something, and they wait 2 or 3 years to buy. Whether they buy at the top or not, they're gonna if they buy and the asset keeps going up, they're just gonna keep buying and they're gonna get more confident. They're gonna throw more money in. And I found that I was never able to like truly get people in without them becoming mad at me at some point because they would end up going through a bear market where their assets dropped 80% or something. So I honestly stopped really trying to get people interested a long time ago, just because I was kind of tired of going through that cycle with them. Then a lot of them don't really stick around long enough, to they'll buy in the bull market and then they'll sell in the bear market and then they just leave. And then you're like, well, I don't know. After going through that a number of times, I learned to just stop doing that and just focus on myself. And if they're interested, they can get interested and they can ask me questions, but I'm not going to be, pushing them in any way.
Yeah, I think over time you eventually stop going person to person trying to persuade them to enter this space, and you just wind up making content about it, right? Like we did.
Right.
But one of the most interesting things that I found in this whole entire fiasco is that the price hasn't moved. We've had, some of the most hardcore Bitcoiners have their Bitcoin stolen, and the price is flat. What does that mean to you?
Yeah, I mean, I think it's actually, what we're seeing right now is very common behavior. for Bitcoin in midterm years. I don't know if I can share my screen.
Yeah.
Let me see if I can try to do that really quick. So, for instance, here, if you were to look at the year-to-date ROI of Bitcoin in 2026, and you were to compare it to, say, 2018, it's kind of like a less volatile version of 2018. And what's really fascinating with it is that the lows even line up, right? And what's even more fascinating is that the the timing, it's like one order of magnitude less. So in 2018, Bitcoin was holding support at around $6,000. In 2026, it's just been holding support at $60,000. And you'll see that in 2018, we had a low in February, just like we did here in 2026. We had a higher low in late March, early April, just like we did in 2026. We had a lower high in May, just like we did in 2026. And then we swept the low in late June, early July, just like we did in 2026. And so what happened back in 2018, back over here, was that social interest was generally dying off. Like it was kind of fading. And if you look at like YouTube views, various crypto YouTube channels, you can see that that's been fading a lot for the last several years. If you were to look at the social interest, it's getting pretty low right now. And it's actually a lot different than it was in 2022. So right now, the social risk, which is made up of looking at metrics like Google Trends for Bitcoin searches, the Coinbase app, followers to various YouTube accounts, and views to those YouTube accounts or crypto accounts, and then followers to analysts on X, exchanges on X, and layer ones on X. When you combine all that, the social interest right now is about 0.193. And if you were to look at where it was in August of 2022, it was at actually around 0.4 to 0.5. So there was actually a lot more interest in crypto exactly 4 years ago. But if you were to go look at 2018 and look at social interest, you can see that social interest back then was also around 0.2, which is where it is today. So I would argue that what we're seeing right now is more similar to 2018 than it is to 2022. And even the year-to-date ROI kind of lines up, right? It's just that it's a less volatile version of it. And perhaps the reason it's less volatile version of it is because Bitcoin topped on apathy rather than euphoria, right? Like it didn't rally all the way up to 200K. We didn't get like an alt season like we did back in 2017 where we rallied up to 20K and we had an alt season, right? All that was a little bit different. And I remember in 2018, there was this sort of complacency about Bitcoin when it was at $6,000. And I thought in 2018, there was a good chance that 6,000 was the low, right? I mean, we were holding it from basically February until November, right? Like we held support at 6K in February. We were still holding it in June, July, August, September, October, November. It kind of drew people into this like false sense of security. And I think it made people think that like that was in fact the bottom. But in reality, there was one more drop to go. And so I guess for me right now, like yes, it's interesting, I guess, that there hasn't been more downside action, price action by Bitcoin. But in the same way, like you're seeing people leave, right? Like you're seeing viewership go down. You're seeing social interest generally drop. And I guess I would be somewhat concerned that if this does follow 2018, then we would eventually lose that 60K support. And then that would lead us into the market cycle bottom that tends to occur in Q4 of these midterm years or, around Q4. So that's my take on the situation. It does not like it has to play out like that, but I think there's too many similarities to completely discount it.
And what caused that violent bottom to fall out in 2018?
I mean, back then there was a lot of, look, to be completely honest, I'm a big believer in narrative follows price, not the other way around. So, people would blame all sorts of stuff. They could blame, there was a big fork back then. If you remember, there was also, you remember Bitcoin Cash when that launched on the exchanges in, what was it, like late 2017 or early 2018? There was a lot of there was also just a lot of disagreement in the Bitcoin space. And you could argue that it had something to do with that. But I don't know. Like, I don't think, I mean, when I look at the charts, do I blame FTX for 2022? You know, do I go through, do I blame Mount Gox for what happened, you know, after the 2013 top? Or do I just say that this is what always happens and we can always find a narrative to support it? Because right now, if Bitcoin were trading at 40 or 50K, we would all be finding the narrative. And the narrative would not be hard to find, right? We would just be like, oh, well, it's the Coldcard hack. Like, I mean, that's the reason why it went down. But we had that. It hasn't gone down yet. I don't know what's going to be blamed if we do go down eventually. But I think it's a culmination of just a lot of people losing interest in crypto. And eventually, you know, as interest continues to fade, there's just not going to be enough buy pressure to hold for 60K to hold. And I think eventually you will go, again, a little bit lower before the end of the year, and then you form that low. But again, I don't really think there has to be anything specific that causes it. I think there's a good chance it'll just happen anyways. And then when we're looking at it post-mortem, we'll be like, all right, well, this is the reason why it happened. But I don't really think we need a reason.
And you bring up buy pressure. One person who was giving buy pressure, but is no longer is Saylor. He actually just sold 1,600 Bitcoin last week. In terms of volume and purchases of Bitcoin, where is it coming from now? What do you think?
I mean, I think there are plenty of institutions that are still getting, I mean, there's some companies that are still buying Bitcoin. There are still some retail participants buying it, but that's a good question. I mean, that's the reason why Bitcoin is stuck at 60K while the S&P is at all-time highs, right? There's just not a lot of interest. And, you know, I don't really see that changing until probably next year would be my guess. So in the short term, the people that are buying are some of the larger. I mean, I think I might even have some charts for this stuff. Like if you look at, I think we have like wallet addresses or something. Here's wallet distributions, wallet positions. Maybe not to get in all that, but I think it was, if we look at supply by address balance, maybe that would be kind of interesting to take a look at. So if we were to look at, okay, if we look at 0 to 0.001 Bitcoin, you know, Bitcoin supply, that's been generally trending up, but it's still like nothing, right? Like it doesn't really represent a lot. If you look at 0.001 to 0.01, still basically nothing, 0%, you know, it's negligible. If you look at 0.01 to 0.1, again, only like 1%, not a whole lot. You can see that some of these larger ones kind of in the middle, right? Like 100 to 1,000 Bitcoin, that's been going up for a little bit. If you look at 10 to 100, that's been kind of flat. 1 to 10 has been kind of flat. And then 0.1 to 1, again, also kind of flat. There's not, I guess you could argue there's not a lot of interest in a lot of these levels. It seems like the main one where it's been going up is the 100 Bitcoin to 1,000 Bitcoin range. And in that range, you're probably not looking at most retail participants, right? Like that's going to be larger pockets. You know, you're talking about millions of dollars worth of Bitcoin. That, I mean, from this stuff, from the on-chain stuff, that's where some of it is. And then I guess there's also some through the ETF flows. But even if you look at the ETF flows, I mean, it kind of ebbs and flows to some degree. Like if we have this like crypto treasuries page, and I think right now, if we look at ETF holdings, like, yeah, it's actually been trending down in recent months. Company Bitcoin holdings, that's been trending up, right? So that's been generally going up. So there's not a lot of retail participation. I mean, you can see that though by looking at social interest already. There's just not a lot of retail participation right now.
How many apps does it take to manage your Bitcoin? One to buy, one to send, one for Lightning, and another for loans. That's a lot of friction. Well, now there's Rhino. Listen to the end, and I'll tell you how they'll set you up with $10 of free Bitcoin. Rhino is a next-generation Bitcoin app that makes living on Bitcoin easy. At Rhino, you can buy Bitcoin with zero fees. Get a Bitcoin-backed loan right in the app. Move cash globally over Bitcoin rails fast and easy. Automate your stacking with a DCA plan, so your stack is growing, whether the market is up, down, or you're touching grass. And it doesn't stop there. Bill pay, debit and credit cards, as well as retirement accounts are all coming soon. At Rhino, your Bitcoin is never rehypothecated. Security comes first, with biometric verification, 24/7 fraud protection, and the ability to move your Bitcoin to self-custody whenever you're ready. Click the link below in the description and download Rhino for iOS or Android. Use code BitcoinNews and Rhino will drop you $10 of free Bitcoin right into your wallet to start you on your stacking journey. Get the most Bitcoin for your dollar with Rhino. So do you still have long-term hope in the viability of Bitcoin?
Yeah, I mean, I do. I think we're going through a difficult phase right now, sort of a maturity. Here's the thing about Bitcoin. I think that we lost our way this cycle because in so many other cycles, there was this excitement about the underlying technology, right? And there was this like genuine, like, like, oh, what could this be in the future? But I felt like this cycle was really none of that. And it was more of like, how do we get more people to buy Bitcoin? It was the ETFs getting a strategic Bitcoin reserve, and that was like kind of the main focus of Bitcoin this cycle. And from an investor point of view, like I would like to see people more concerned about the fundamentals of the asset class rather than how do we just get more people in. Because what happened is, as an industry, we focused on just getting more people, but then the projects that were rewarded were just all these meme coins and that kind of stuff. And it's hard to take the industry seriously when all the developers that actually try to build something useful are ignored, and the developers that build meme coins are praised, right? So I think the industry kind of got its wires crossed, and there was this massive malinvestment of capital. And now we're trying to get back on the right track, but it's also a painful process. And to be completely honest, this is the first time I've been in crypto a long time. This is the first time where I feel like sentiment has been this depressing, and you're really starting to see a lot of companies go bankrupt. And I think a lot of that has to do with the fact that we've been at higher interest rates for a long time. And there's not really any signs of that changing right now. Remember, a lot of the companies in crypto only exist because of loose monetary policy. When the cost of money is free, it's easy for these zombie companies to survive. But the minute monetary policy tightens up, a lot of those companies that were never really profitable to begin with, they end up going bankrupt, which sucks. But for the economy, it's not a bad thing because it forces the workers of those companies to go work at a different company and theoretically become more productive for society overall, even though the process of getting there can be a very painful process. But that's how the business cycle works. And you could argue that we're just in the phase where there's really low interest, and that's unlikely to change, at least in the very, very short term. And so you're seeing companies, call it quits because they don't really see the light at the end of the tunnel either. They're seeing social interests go down, people are not using their platforms anymore, and now they're struggling to survive. So the good news is that, the bad news is that people are there's layoffs or people are losing their job. The good news is that long term it should make the industry stronger if we can get people to focus on what actually matters in the cryptoverse, and that's not all the meme coins.
Yeah, it's been a long time since there's been euphoria, right? Selling JPEG pictures of rocks are definitely a zero interest rate phenomenon.
Right.
But we are in a different world now. We've got over 5% on the 30-year and a new head of the Federal Reserve. You've been tracking this closely. You say the bond vigilantes are out for blood. What's going on with the Treasury market?
Yeah, basically you have the Fed funds rate at 3.75. And then you have the 2-year yield now at 4.2. So I'm a believer. A lot of people would disagree with this, but I'm a believer that the neutral rate is approximately equal to the 2-year yield, and the neutral rate is essentially the rate at which, if the Fed funds rate is above that level, then the economy starts to contract. And if the Fed funds rate is below the level, then the economy would start to expand. Now, a year ago, the Fed funds rate was above the 2-year yield, and I think things were starting to slow down, but the 2-year yield has gone back up. And so you can kind of see there's some areas where the economy is starting to heat back up a little bit. Inflation is starting to go back up. We got a move down last month, but it's up a lot from where it was, say 6 months ago. The unemployment rate is trending down. Initial claims just hit their lowest level in like 50 years. And I mean, if you follow, the manufacturing, ISM, that sort of stuff, manufacturing activity is starting to pick back up. So in a lot of ways, you can see that parts of the economy are starting to heat back up, but the Fed has been unwilling to unwilling to raise. The Fed's been unwilling to raise rates. And when the Fed's unwilling to raise rates, when the market is more worried about inflation than a recession, then the only thing for the long end to do is to go up, right? Because the market is basically saying, look, you need to raise rates. And every month that goes by where they don't raise rates, that's just going to provide sort of a tailwind for the long end to likely go higher. A lot of people mistakenly believe that if the Fed lowers rates, it'll lower the 30-year yield, right? Or if they raise rates, it'll raise the 30-year yield. But that's not true. If the Fed were to lower rates right now, which would not make sense, but if they were to lower rates, it would actually make the 30-year yield go up a lot, because then the market's like, all right, well, we're going to have inflation and we expect future interest rates, to eventually be much higher, even though in the short term, it's not. So the Fed does not directly control the long end of the yield curve. You could argue they indirectly control it, because the 30-year yield will react to things that the Fed is doing, but just not always in the most intuitive way, right? So, the 30, and here's a concrete example for anyone who refuses to believe that. The 30-year yield is higher now with the Fed funds rate at 3.75% than it was 2 years ago when the Fed funds rate was at 5.5%, right? So we're almost 200 basis points lower than we were 2 years ago, but the 30-year yield is higher. So that's all the proof anyone needs to understand that the Fed does not control the long end of the yield curve, at least not directly.
And this is bad news for a government that's roughly $40 trillion in debt. Do you keep an eye on the debt situation for America? And do you think it's getting out of control? Are we about to hit the point on the exponential where it just goes straight up?
I mean, I feel like it's been doing that forever. I made a video back in 2020 or something, or 2019. It was like an April Fool's video. Maybe it was 2021. I don't know when it was. It was like 5 years ago. And I remember showing this chart of the debt, but not showing like what it was, and just pretending like it was a cryptocurrency. I'd be like, look, guys, like this cryptocurrency. And then at the end, I was like, actually, this is not a crypto. It's the debt. So as long as I can remember, all it ever does is go up and to the right. I mean, the idea of a debt ceiling is kind of comical. It's almost like they should call it debt target, because every time they set a ceiling, the debt just gets there, and then they raise the ceiling. So it's not really a ceiling to begin with. I have no idea when it's going to start mattering. Like, I have no idea. You could argue that it should have started mattering years ago, but it didn't. And so I'm not going to sit around and be a doomer about the debt, because, for all I know, by the time it actually matters, it could be long after I'm gone. Maybe it's in 100 years. I don't know. I don't know when it's going to happen. But I do know that, one of the major causes in the past for civilizations to fail is bad monetary policy. The problem is that, as an investor, it's not really an investable thing. I mean, for me as an investor, I'm not going to bet on that. I'm just going to bet that the world continues going on the way it continues to go on. And if it doesn't, then I'm going to have bigger issues than what my investments are doing. So that's kind of where I am with it. I don't know if it's going to matter, or I don't know when it's going to matter. It'll probably matter at some point, but it's not something I spend a lot of time thinking about.
But it's the fundamental case for Bitcoin, right? As long as that number's going up, it gives a reason to invest in Bitcoin. And that's why I think Bitcoin is sort of like crisis money, right? Like you want Bitcoin when that debt crisis happens. And that's why there's still a use case for it. And I think it will still provide people with value over time.
Yeah, I mean, I think right now we're going through what every asset class goes through at some point. And we got carried away, we focused on the wrong things, and now we're paying the price for it. And I'm a big believer that Bitcoin will come back eventually, even if it goes much lower. Maybe it goes even much lower than where I think it could go. And I don't know. I think it will come back eventually, but the industry hasn't helped itself at all for the last few years, and going through painful periods like now should theoretically get us back on track.
And what's your overall take on the economy at the moment? You've been calling for a 10 to 20% pullback in the S&P, as we usually have in midterm years come September or so. What's your take on the stock market and the economy as a whole?
I mean, I think the economy's fine right now. I think you'll likely have a 10 to 20% drop in stocks. It'll either start in August or September, in my opinion. I probably would lean towards September, but if you look at the last 3 midterm years, the corrections either started in August or September. I think 2 of them were September, 1 was August. So I think in 2022 it started in August. In 2018 and 2014, I believe it started in September. And in 2018 we had the same president that we have now, you know. So yeah, I think it'll start sometime. And by the way, it's that correction that normally corresponds to the low for Bitcoin, right? So you were asking me earlier about like, what is there a narrative that we need? I don't really think there's a narrative that we need. I think it would just be a 10 to 20% drop in stocks would cause Bitcoin to lose 60K, you know? And then that would correspond to the market cycle bottom for Bitcoin. That would be my guess as to how this whole thing plays out. And I think the reason for why the stock market would drop 10 to 20% will be blamed on one of two things. It'll either be, the Fed raises rate. By the way, in 2018, the stock market correction started, I believe, on September 21st or something like that. It was around that time. And the next FOMC meeting is mid-September. So I would say one of two things are going to happen. We're either going to get a rate increase in mid-September, and then shortly after the increase, then you're going to get the correction, right? Or you don't get the increase, and the bond market goes absolutely crazy, and yields just explode higher, and it forces the stock market down. So from my perspective, it doesn't really matter what they do at the September meeting. I think they should raise rates. I think the correction probably won't be as bad if they raise rates than if they don't raise rates. So, but I think it's gonna. I would lean towards September, but I'm not put off by the idea of getting a correction in August. But look, I'm only calling for a 10 to 20% drop. Like I'm not calling for 50. I'm not calling for anything like that. I think you just get a 10 to 20% drop. It resets the sentiment. Bitcoin puts in the market cycle bottom, and then hopefully we start the next bull market.
Yeah, we saw some weakness over the last month when it comes to these AI stocks. A lot of them have rebounded just in the last week or so, but there's just too much froth going around. And usually when these bankers come back from holiday in September, they look at their statements and realize, okay, I can take some off the top here. And it wouldn't seem like it would take much to cause that 10 to 20% drop.
Right. I mean, it wouldn't. I mean, basically, you need the semis to. I mean, they're kind of going back up right now, but if they mean revert, say back down in a month or two, and that corresponds with a Mag 7 mean reverting back down, because you look at stocks like Microsoft, and so they've gone up a lot recently as semis finally corrected. So all it would take would be semis like not immediately going back to all-time highs, and the Mag 7 coming back down a little bit, and I feel like you easily have your 10 to 20% drop right there. I mean, we had a drop earlier this year, and that was 10% or 7 to 10%. A lot of times the second drop in the midterm year is bigger than the first drop. So like in 2018, we had a drop at the very beginning of 2018, and then we had a drop at the end of 2018. So I think 2026 is going to just play out the same way. Like we had a drop at the beginning of the year, we'll have a drop at the end of the year. That'll correspond to the cycle bottom for Bitcoin, and we'll continue on, and hopefully next cycle we focus on what matters, what's more important, and that's not the meme coin stuff. And I know a lot of people are really into that, and they call me the Grinch but the reality is it's not, none of that stuff is a good investment, and it's a great way to lose money, than to make money. I mean, Bitcoin, over a long enough period of time, everything in crypto eventually bleeds to Bitcoin. Like that is something that you will see happen, whether it's altcoins, whether it's crypto companies, whether it's exchanges, like when when they IPO and whatnot, they eventually bleed to Bitcoin. I would even go as far to say that over a long enough period of time, all the Treasury companies will also bleed to Bitcoin. And one of the reasons the more optimistic reason why Treasury companies will bleed to Bitcoin, this is the optimistic reason, is what if Bitcoin goes up but Treasury companies are forced to sell their Bitcoin like MicroStrategy or like Strategy has been doing recently. Perhaps that's the reason they underperform Bitcoin, is because they are forced to sell it to appease their shareholders while the price of Bitcoin keeps going up. I mean, that's the optimistic view.
Yeah, I think we all hope that Bitcoin does go up. And when it comes to Michael Saylor, it's been quite the saga. I mean, this summer he's selling Bitcoin, he's selling MSTR, he's rebuying STRC. Last time we talked, you thought that a blow up of STRC could cause the final crash out in Bitcoin later this year. STRC has recovered. It is above $90 at the time of recording. Do you have any further thoughts on strategy, Michael Saylor, and the guy that said never sell, now selling?
I'm not going to fault him for selling because I sell Bitcoin. Like I was selling some like I don't like it when my portfolio drops like 80%. So I usually try to get out some. So I'm not going to fault him for selling, but I think it sends a message to people that, this is something they can do. And I think he probably should have toned down the rhetoric some previously. Like, instead of telling people, what he said and saying like never sell your Bitcoin, perhaps he could have just toned that down a little bit, because now people are somewhat feel this like righteous anger towards him. But I've never fully understood. I mean, I think it would be much better if they had a company that actually made money doing something else, and then they use the revenue to buy Bitcoin. I mean, I know that sounds like a crazy thing, but that would, I think, be a lot more healthy for them. It's not necessarily the healthiest thing when, like, it just doesn't make sense. Like, if people buy the stock because like the company's gonna buy Bitcoin, right? Like, that's the point, is like you're kind of, it's like a leveraged bet against Bitcoin. But it's weird because now if people are buying it, they're buying a company that's now selling Bitcoin. So again, they've sold a relatively small amount compared to their holdings, but it's not about the amount, it's about the message that it sends. Like, they're, when trouble does come, they absolutely will sell their Bitcoin. They have, they're going to have a fiduciary responsibility to appease their shareholders, and if the stock is down and they've got hundreds of thousands of Bitcoin sitting on the balance sheet, then this is something they're willing to do. But I mean, this was something they're always willing to do for anyone who knows how that works. Like with Cheryl, I mean, this is something that Saylor can't just unilaterally say that they would never sell. Like, they could be compelled to sell even if they don't want to. So I mean, it is an interesting dilemma that they find themselves in. But I do believe the better strategy would be to have a set of companies that actually make money, and then you use those profits to buy Bitcoin. I mean, I hope Stretch recovers and reaches parity, goes back up to 100. I don't want people to lose money. I want all these companies to be successful, but I can promise you that there are a lot of people that will never buy Stretch again, because they're not going to have the confidence that it's going to hold at 100. Like, if it can break it once, what's to stop it from breaking again? And, it went all the way down to 71. There's probably a lot of people that panic sold there, and so I don't know, like, I don't really have a lot of confidence in it that like, why would I put my money there and hope that they figure it out when I could just make a much safer play and sleep better at night?
Yeah.
Like, if I'm going to go buy Stretch, then I'm basically, every morning I wake up, I'm checking to make sure it's not collapsing, and I don't want to live that way. Like, I'd rather be in something that gives me a lower return, that I don't have to worry, is this gonna recover or not? And that's just where I am. I know some people would completely disagree with that, but I don't have any problem saying my opinion about this stuff. I think they would have been so much better off if they never launched all these different financial products to begin with, and they just stuck with their initial strategy. I think that would have been much better for Bitcoin.
Yeah, they definitely have activity bias. It's really hard not to do anything, but in Bitcoin, that's usually the number one thing to do, is nothing,
Right.
and you'll be rewarded in time. And I was talking to Matt Hogan, the CIO of Bitwise, and he was saying there's no institutional interest in STRC. They don't trust this thing yet.
Who
And
would?
Yeah.
I mean, like, how can you look at it and trust it when it literally just went from 100 down to 72? I don't care if it goes back to 100. How could I ever trust it again? Because what's to stop it from eventually dropping to 40? And it's like, it's like if you held UST in a prior cycle, that went to zero. And then when USDC started crashing, I don't know if you remember, but in 2022, there was a weekend where USDC lost its peg. And it was trading, at least 10% down, and I don't know exactly where it was, but it recovered. But there were probably a lot of people that panic sold USDC when it lost its peg because they just watched what happened to UST and Terra Luna. So for me with Stretch, there's probably going to be some people that are going to sell as it approaches 100 just because they want to get out and they don't want to risk what's going to happen if it goes back down to 70 again. Like what happens if Bitcoin plays out like it did in 2018 where it holds 60K and then come Q4 the bottom falls out? What happens to Stretch then? Are they going to I don't know. It's just I hope it survives, but it's not something I'm going to trust my money with.
And there's just been so many narrative violations. They're up to $4 billion in USD when they started this whole entire Bitcoin buying strategy when they just had $1 billion in their balance sheet and they were looking for a safe refuge. And so that brings us to a point where it feels as if, Saylor's been the main character of Bitcoin since 2021. Really, right? We had
even since 2020. Even like late 2020, he started buying it, and everyone was like rallying around him.
Who is this guy? And you go to the conferences, and still, he's the most packed out room when he speaks. Like
he's the keynote. He's the keynote at like every Bitcoin conference.
Yeah, and it feels like this is a time for a change. The industry is ready for sort of something new, something fresh. And we had no idea about Saylor before he came onto the scene. And I don't think we have really any idea who the next Bitcoin main character will be. But do you agree that it's time for a sort of changing of the guard and narrative and new people?
So, yeah, I think that, look, I've been to a lot of the Bitcoin conferences and I've enjoyed myself at them. And I've thrown parties at them and I've met a lot of great people. But I don't really like going as much as I used to because I go and it feels like half the talks are just treasury companies talking their book, and that's not why retail investors go to conferences. They don't just want to hear these guys that are moving around billions of dollars and like what they're doing. And obviously they're all really bullish. And I'm actually throwing my own conference like later this year. And the idea is to just, allow for people to talk about this stuff without getting booed off the stage if they have a dissenting view, Like I've gone to a lot of these keynote speeches that Saylor gives. And again, I like Saylor. He's done he's done more for the industry than a lot of people. And he's tried really hard to, to bring more people in. But at the same time, I've been to so many of these talks and so many of the talks are just like, all right, he talks about how his conservative price target for Bitcoin is like, millions and millions of dollars just a few years from now. And it's like it's complete disregard for the diminishing returns we've seen in Bitcoin. And I feel like you can hype. A lot of people like going to the conferences to get hyped up and to, but after a number of years of hearing the same message and you see the price of Bitcoin is the same valuation today that it was 5 years ago, at some point, like maybe we should mix it up a little bit, Yeah. So I think they should. I think they should, maybe bring in some other people to talk, and maybe make the keynote not Saylor every single time. He can be a speaker, but it's the same talk basically. Again, I love Saylor. Like I have no problem with him. One of the years, I guess the main keynote. The only time that Saylor was outdone was when Trump was speaking at Bitcoin, 2024, I guess. And I was there, and you had to get in that room like an hour at least before that talk started just to even be allowed in the room because of all the security issues they had. But even that is completely antithetical to Bitcoin. I mean, like, the idea that we're going to have the government buying Bitcoin and having a strategic reserve, I'm like, why are we celebrating this? Like, this is like completely antithetical. So again, we lost our way this cycle. We celebrated, politicians that were launching meme coins over people that were actually like trying to do good things in the space. And I think there are, plenty of people that probably deserve to be up on those stages giving talks rather than just recycling the same politicians and the same, I don't really think a lot of people go to the conference to hear that stuff, but that's what sells tickets, just the headlines like, oh, Trump is speaking. But I don't know. I feel like we should get back to what, focus more on the technology, focus more on like, what can this become and the fundamentals and that sort of stuff. And if you're gonna have someone on stage providing a price prediction, maybe have it somewhat rooted in reality, not it's going to be $20 million and that's and that's their conservative view.
Yeah, I've seen a lot of Saylor keynotes, and I mean, in the beginning, it did have that Bitcoin ethos. This is going to change the world, and then there was more crazy price predictions, and now just the last one is just all STRC. Like the one in Vegas in 2026, it was.
I didn't even go to that one because we had our newborn. Our newborn was born in May, and so I wasn't able to go, and I didn't want to risk missing the birth. So. Yeah. What was it all just STRC? Was that like the conference?
45 minutes of STRC. It really was, and the room was packed more than for anybody else. It just blew my mind.
I don't get it. I don't understand why that stuff is like it's a Bitcoin conference, but we're promoting stuff that's not Bitcoin. Like we're promoting stuff that obviously lies tangent to Bitcoin. But if you're at a Bitcoin conference, just promote Bitcoin. Why promote all the other stuff? And you know what? Sorry, one more thing. Like a lot of it, and I'm not talking about Saylor with this. I want to be clear. There are a lot of treasury companies that are down like 99% right now, and I, to just call them out to some degree, a lot of Bitcoin maxis at these conferences for years would mock and ridicule people that would buy altcoins, right? And the reason is because they would be like, all right, well, they're just in it to enrich themselves, which they're not wrong. I mean, a lot of the altcoins are literally there just to enrich the founders. What they said was not wrong. But what I feel like they did is they saw there was money to be made, but they wanted to maintain their, some level of morality or their integrity. And so they figured out a way to extract the same types of gains from altcoins by launching these treasury companies and being like, well, we're promoting Bitcoin. But now you look at it and you're like, well, a lot of the treasury companies are down more than a lot of the altcoins. So I think the argument is that a lot of the treasury companies only exist to enrich the founders. Right? That is why they extract value. I'm not going to name names, but a lot of them just extract value as much as they can. They dilute the shareholders and they're down 99%. And that's a problem, right? So again, I'm not saying they should be completely, ridiculed out of the industry, but we should be willing to call a spade and be like, look, what you did is no different than the people that you criticized. But you're pretending like what you did is okay because it's loosely based around Bitcoin. But people lost more money buying your stock than they would have if they had just gone out and bought one of the top 10 altcoins. As crazy as that sounds. So again, the treasury company stuff, like I don't know, I wish that stuff would honestly just end in the way that it currently exists. If you want to go out and do like what Lynn Alden's doing, or maybe some other guys, and you're like trying to buy up companies and using the cash flow from those companies to then buy Bitcoin, or what like I think Grant Cardone, I think that he's doing that with like real estate, where that I think is different because they're not relying on Bitcoin going up to buy Bitcoin or, to justify. They're using cash to buy it, and they're not taking on a ton of debt to do it. Like it seems like a safer a safer play. If you want to do that, that'll maybe be the future. Some of the future talks center around. But I feel like all these treasury companies that just exist solely to raise money and buy Bitcoin, I don't get it. I'm like, if you want to buy Bitcoin, just go out and buy Bitcoin. Why give your money to someone else to buy it?
Yeah, I mean, hopefully that's been proven to most market participants at this point, and that the real game is Bitcoin here. And the thing is, I mean, the Bitcoin conference, it's owned by a treasury company now, right? And they are down 99%. And
Right.
I understand that you got to put what's hot in the media game. You have to have speakers and of what is trending and get people through the door. But at the same time, it's if it's the Bitcoin conference, it's got to be about Bitcoin. But let's finish up on your conference. What makes it different? Who's going to be speaking, and where is it going to be?
Yeah, so it'll be in Miami. Let me see if I can pull it up here. It's going to be a smaller conference, right? It's not, we're not throwing a massive conference. It's in Miami. The main conference day is November 21st, but we're probably going to have some talks like the night of the 20th. But it's the weekend. It's like November 20th through the 22nd. I imagine most people will fly out on the 22nd and fly in on the 20th. So the main conference day is the 21st. And it's at, in Miami. You can see all the details here. It's, we got a lot of speakers. Obviously, I'll be speaking. We got Carson. I don't know if you guys know him, but
yeah, he's great.
Yeah, he's a great person to follow. We got Mark Yusko, and I really like Mark a lot. I think he's always provided an interesting perspective on the space, and I don't think he's ever been shy of just saying what he thinks. And so we're happy to have him there. Alessio Rastani, I've had Alessio on my channel a few times, and he's more of like a technician with Bitcoin rather than like more of a fundamental person. He's more of like a price technician, but I think he's able to look at the market in a more objective way than I feel like a lot of people are. And probably part of that is he's probably a little bit older than a lot of the guys you'll find on Bitcoin YouTube or whatever. So he's probably done this. He's probably learned a lot of these lessons before the hard way, and now he's I think he's a much better trader. We have James Check. He used to be one of the analysts for Glassnode. He's an on-chain guy. It'll be good to have him there. We got Mike McGlone. He's from
the Bear.
Yeah, he's a bear, but he's from Bloomberg Intelligence. He'll be hopefully appealing more to some of the TradFi guys and more like the Wall Street stuff. And with the bears, right? I mean, bears are wrong for really, really, really long periods of time until they're right. And so this year, for instance, Bitcoin has gone down a lot. But the thing is, and I've tried to talk to people this as well, is that I've been a bear this year, right? Like I have no problem being called a bear because I'm like, well, it's a bear market. What do you want me to be? Like, I mean, I'll be a bear in a bear market and I'll try to be a bull in a bull market. The biggest mistake that bears make, though, is refusing to become bulls when the time calls for it, right? And so I think it makes sense to flip bullish on Bitcoin, this, in the second half of this year, like now, basically. I mean, I think Bitcoin will go a little bit lower, but I've already started accumulating. Like, I'm not going to wait until Q4 to buy, but I do think it will go a little bit lower. You have Guy Turner and Rob Wolf. Like we've been doing NFA Live together for years. Gareth Soloway, David Lin, probably a lot of people know them. Gareth has his own, YouTube, and he's more of a technical guy. David Lin, he interviews tons of people on his channel. He used to work for a different company, Kitco, I believe, before he went off and started his own thing. And then we got Jason Pizzino. He's more of like he does a lot of like real estate stuff. He's over in Australia though. But he's also, really interested in Bitcoin. So I think he's going to be speaking some about, like the real estate cycle and how that kind of impacts Bitcoin. And then we got Evan Aldo, FA, Tom Crown, Matt Crosby is one of the guys from actually Bitcoin Magazine Pro. He actually was a moderator for a talk that I did back at the Bitcoin conference in Vegas, but in 2025. So I like Matt a lot. So he'll be there, and we're still working on getting more people, but I also like it's primarily a one-day conference with a few talks on either side. So it's not it's not one of those things where I feel like we need to have 100 speakers.
Mhm.
Like I just want to have maybe like 20 speakers and have those speakers have enough time on the stage to talk about what they want to talk about. And we're also not going to have like 5 stages either. Like it's a smaller conference, and the goal is to just bring people together to have like more of a rational discussion about the markets. And honestly, Bitcoin's not the only theme. I mean, the name of the conference is called Investing Through the Cycles. It's not into the cryptoverse, right? It's still ITC, but it stands for, the idea is let's talk about all markets. And obviously, one of the major themes will be Bitcoin. We'll probably talk about Bitcoin more than anything else, but we're going to also talk about other markets as well and how they all kind of have this connection with each other.
Yeah, it's a lot of brain power. Some of the best YouTubers around, honestly, covering Bitcoin and the markets you're going to have at that conference. So it looks very exciting, and I highly say people should go check it out. Absolutely. November, Miami. I mean, is that right after Thanksgiving or right before? Or
it's right before. So it's the Saturday before Thanksgiving. So the reason why I did it then is because there are a lot of schools that get that entire week off of Thanksgiving. So I was like, all right, well, you could fly to Florida, go to the conference, and then enjoy the week in Florida after.
There you go.
Some people obviously won't be able to go because maybe they don't want to travel 2 weekends in a row or whatever reason. But we're just going to, the main reason I did it then though, was I wanted to do it late enough in the year where there's a good chance the market cycle bottom will already be in, right? And I think it'll either be in or it'll be really, really close to being in by late November. And so that was kind of the reason. It was like, hey, let's have a conference with people near the market cycle bottom and try to get this thing moving in the right, try to get people's spirits back up.
Take off the bear hat, put on the bull hat, and get ready for a new fun 3 or 4 years ahead of us.
Right.
All right. Well, Ben, thank you so much for your time. People, go check out what's the website for the conference?
Oh, just benjamincowen.com/conference.
Boom. There you have it. And of course, find Ben on YouTube. Anywhere else you want to send them?
No, all right, that sounds good to me. Just go to those. YouTube is the best place to find me. So I would just check that out, YouTube or the benjamincowen.com.
All right. This is a very fun conversation. Thank you very much for your time, and I'll catch you soon.
Thanks for having me.